Well, Q1's over. I guess it wasn't that bad after a 300-point rally yesterday and so far today. Got some earnings. Not everything's up here. Nike, Restoration Hardware getting killed. What does that say about the consumer retail sector? Or maybe those companies just lost their way. Tesla perking up as SpaceX IPO rumors out there. We'll follow up on that. Todd Gordon, 835, is said Inside Edge Capital. He'll give us technical and fundamental outlooks on the markets. We got some analyst ratings. You know, the market's up 1,000 points. They had, let me pull those buy ratings out of the drawer. And they're out there. A lot of stocks to cover on that. We're fired up here. No joking around on this April Fool's Day. Let's get pre-market prep started right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, let's start out with our charts. Sponsored by TradeStation Securities. Trade smarter, move faster, stay in control with the platform built for serious traders. Integrate AI, Claude, into your trading through TradeStation. Well, you guys see it. We're up 55 handles. We're working our way back up to that those moving averages. 66.25.5. Buck taking it on the chin today, down 50 cents, 99.27. TLT flat, 86.77. Crude, well, it's pulling back, but we'll talk about crude here. Is it going to keep going down or stabilize? That could be a problem. Gold and silver not cooperating today. GLD up $6, 436.38. That's 1.5%. Silver down a few pennies, 67.95. And Bitcoin, boy, is Bitcoin quiet here. Just consolidating at the low of the move, but it's up $840. It's 68,875. Good morning, Dennis. Dennis, it's surely a lot easier to do the show on days like this.
Is it?
When the market's getting killed.
I don't know. I like doing the shows both days. It's fun both directions here. And I like the chop. It's been a great volatility. It was a fantastic trading month. Investing month looked better with the window dressing rate at the end of it there. So obviously, you're feeling a little bit better about your long-term accounts. Everybody on Twitter has proclaimed that the bottom is officially in. I don't know. Maybe it is. It very well could be. Lots to chew on. Let's just, recap what happened yesterday. So early in the morning, we get, actually it was the previous night. We get the Wall Street Journal, about 9 p.m. would have been on Monday night. I'm losing track of days. Wall Street Journal reporting that Trump will potentially pull the USA out, even with the strait still closed. S&P's rally, 75 handles on that. We stay up like that till yesterday morning, staying up, holding up strong. Fool me once, shame on you. Fool me twice, shame on me. Markets is kind of hanging out. It starts to leak a little bit, but then what happens? Iran comes out, and we get some reports from Iran that, yes, there is the potential here for a deal to be struck, and that was coming from the opposite side. So anybody who was shorting yesterday's pop gets run over by that headline. Absolutely run over. So then you have what is called like a little mini short squeeze. Don't look at short interest and stuff like that. You got to just think about the aspect of who's in these trades here right now. We've been selling every rip. Every rip has been rewarded. You get the rip, but then you get the headline on the rip. So everybody caught yesterday. Caught bad. And then they say, wow, there's still no deal. There's still no deal. Oil's not coming down a lot. Still no deal. But the bottom line is you caught all the short-term traders, the day traders short yesterday. A lot of them. So then you're building and building. Now you get another overnight rally here. We get news that Trump is going to speak at 9 p.m. to the nation. People are hoping, that he's got a timeline. Rubio is saying 2 to 3 weeks here now. Originally, we were saying it might be as much as 2 to 3 months. So you have a lot of stuff, happening here, which is positive for the bulls. Does this mean that the bear market is officially over? You never know these questions here. We still have AI disruption. We still have a lot of things to worry about. But it's been a hell of a rally. And you know what? Let's celebrate it. April Fool's Day. Heck, if Trump's fooling us or Iran's fooling us, the market's you're feeling pretty good about your long-term portfolio right now.
I mean, also when, the president of the United States is speaking, at 9 o'clock, I mean, whether Democrat, Republican, I mean, usually they don't come out and tell you, bad things, right? So I think you have a little bit of a rally on that. It's,
For sure. They're thinking he's going to address and say, hey, we're going to be out of here in a week or two. We got a little bit of operations maybe left, but we're going to be out of here. In any regard, he's going to try to say stuff to prop up the market. This is what Trump does. Trump doesn't usually say anything that, that's why I've always been saying is the gap risk has been to the upside for a long time. It's like been leaking on no news. And then you get obviously Trump coming in and then you start to move up again. So, I mean, it's been leak, Trump pump, leak, Trump pump, leak, Trump pump. While yesterday, we get actually the Wall Street Journal pump and then the Iran pump. So now we're going to get the Trump pump on top of this all just to make sure we blast all those shorts.
And I love these kind of setups. They're easier to talk about when, because when it's going down, it's going down. You're like, how far are we going down? And we did put in a double bottom. To me, it kind of feels like a triple bottom because we put a low in Sunday night at 63.50. We came all the way down 100 handles and tested it during the regular session on Monday. And then we tested it in the after hours pre-market session on Tuesday. So I know that's only 2 days worth of action, but when you follow the intraday and the 24-hour market, that's what you got. Now every move has a counter move, right? And I just pulled up the 50% retracement in the S&P. This is basis the front month futures. You can use the cash. You can use whatever you want. The numbers all kind of work out the same, but you got room here. You got room to 67.25. Do I think we're going to 67.25? Who the hell knows? That's another 100 handles.
It's the next headline. But the only thing is, I think, it's a very good sign that we didn't sell off and then Iran. We held this rally here too. The bulls are back in control here. At least, it's amazing in 24 hours, really, well, a little bit longer than that, 36 hours. 36 hours, we're sitting at the lows and looking really ugly. And then bang, bang, two positive headlines, one coming from the Wall Street Journal, I believe it was, and the other one obviously coming out of Iran. And bang, we're getting back a third of the losses from the last month and a half, which feels like, pretty, this felt pretty awful. So, I mean, we have to consider here, like, maybe that was the bottom. They don't, like, hang out usually at the bottom and then start climbing back up. It's violent spikes. They like V-bottoming. So there is that possibility that it's there. There's so many other, issues with this market, though, and that's why I think I'm still lightening up the longer-term stuff because, you just don't know where we're going. I had a conversation yesterday with, one of my friends who runs a software company, and it's a very big company, gave me a call and said, what's happened? He says, what's happened with this stock market? And I'm like, we're just obviously the war trades brought us down and, we have worries about, AI disruptions happening. So two real major factors happening. And he's like, what about jobs? And I'm like, well, that's a wild card for later this year. And then he said, because I'm firing people left and right. He's like, there is just so much, AI is just being able to code for him. And he works for a software company. He's like, I'm just firing people left and right. So I'm like, okay. Well, this is, good information to know that there is software companies that are fine. We know this is new information. We're going to see it happening. It's common sense. We can see what's going on. But, I mean, jobs are going to be an issue in the second half. But the market is not worried about that at all right now. And I do think the AI efficiency trade, much to the Citrini report, could end up bringing us back to all-time highs before jobs become an issue. But jobs will be an issue. So don't marry your long-term positions because I think we're going to go into a very ugly period later this year. I think they're going to have to lower rates. That might help the markets here.
It's going to be hard to lower rates.
To worry about long-term.
It's hard to worry about lowering rates in this inflate.
Oh, you're not even thinking about that. Nobody's even thinking about that.
No one's even thinking about it. Just sticking with Microsoft software, lost a quarter of its value in the first 3 months of the year. Its biggest loss since the financial crisis. I mean, we all know the cost and the return on the artificial intelligence build out. Earnings multiple hasn't been this low since the fourth quarter of 2022 when OpenAI introduced ChatGPT. Microsoft did have a decent day on Monday when the market cratered. That outperformed on Monday. The chart still looks absolutely horrible. And just sticking with the job cut theme, Oracle slashes workforce to help pay for AI data centers. Is that a typo, or does that say 30,000 cuts? Is it only
30,000 is what the rumor. I don't know if we have confirmation on this, but this is what we're going to be talking about. Is the major like this is why you have to. The second half story is not going to be about the war. It's going to be about jobs. This is where it's going to head. Now, the market doesn't look far enough ahead to even think about that stuff. So I don't know if you want to worry about that stuff with your stocks here yet. But it's going to be a worry. I mean, this is coming. This wave of massive job losses from white collar is not a myth. It's not, these AI jobs, even the people who are calling, there was somebody saying that AI could create more jobs than it destroys. But then that person, it was on CNBC and made a good point. He's like, but that's not going to happen right away. He's like, it's going to destroy the jobs before it creates more. So there could be a gap there. Gene Munster saying he thinks unemployment rate, I think he said 12 to 14% could go next year. I mean, there's going to be job losses from AI, 40,000 Oracle, Snapchat, Meta rumors, there's going to be a lot more announced. The thing is, the stocks are popping on the job losses, though. The stocks are popping when they're announced. They're applauding it because, one, they're going to make more money if they have to pay less people. So, I mean, is it necessarily bad for the stock market yet? That's still to be determined. Long run, I think yes. Short run, you may get that efficiency pop.
You know where jobs are going to be added? Stock Trader Network. We are adding people right and left to on this, and
we're helping.
Programmers, developers. That's people. If you know AI, send me an email, joel@stocktradernetwork.com. So there's periods of time like we cycle to, we'll talk about interest rates, or we talk about the Fed, or we talked about Jerome. And for about a year and a half, Dennis, you talked about Tesla. And it's just kind of leaked off that all-time high. But what do you need? You need a catalyst, right? And you certainly got one here for Tesla coming up.
Well, we have, and I would not say the registrations is, the big, we got Q1 delivery numbers, people getting excited. It's got a higher beta. It's going to move up with the market. But there's a rumor floating around, and I don't know if this is true. So we got to go to the SpaceX news first, because it's going to lead us into the Tesla here. So SpaceX, rumors again, all rumors, no confirmation. But it sounds like SpaceX is getting ready to file that IPO, lining up 21 banks for a mega $1.75 trillion IPO, codenamed Project Apex. I don't know where they're getting this information from. But SpaceX is rumored that they may announce, it's not going to be imminent. It's not going to be like we get the IPO next week, but they may officially announce the IPO. There are also rumors here, folks, that have floated around that Robinhood's not going to get a piece. Which would be a big stab to Robinhood. It was actually trading down on that yesterday before the everything rally happened here. But the other rumor that we're getting, which is huge, is that it's being floated around, and I don't know if there's any truth to it. These are just rumors that are floating around, is that Tesla shareholders may actually get a chance to participate in the IPO. That, my friends, has got a lot of the Tesla cult really excited here. So if they announce an official SpaceX, just this scenario analysis, SpaceX gets announced and they say Tesla shareholders are going to have, the rights, or, they give them some rights to potentially participate in the IPO according to how many shares they have. I mean, that would be a big boost for Tesla. So I was saying yesterday, I wouldn't want to be short Tesla right now because that rumor is out there. And Elon Musk does funny things. I mean, I could see him doing that. He likes to reward his shareholders. He likes to reward his companies and the people who are with him. It would not surprise me in the least if he somehow found a way to give Tesla shareholders the right to participate in the SpaceX IPO. That, my friends, is a potential catalyst for Tesla as well. So keep that in mind. I'm still long Tesla in the long-term account. It's a small position. I've been long it forever. So, but what do you think? Like, talk Tesla tech, and then again, all these other ones you got on the screen right now. If we actually get the official announcement, I bought DXYZ yesterday because it's got a 16% position in SpaceX indirect. VCX, we can see popped yesterday. It's got, a small position in it as well. And that stock is crazy. There's also a few other ones, private ones, or other ones that we've talked about on the show as well. And I don't have all the ticker symbols in front of me right now. But there's 5 to 6 publicly traded companies that can participate here. So I mean, this could be the big announcement next week that we get, and that could pop it up. I don't know if the Robinhood Ventures Fund has
Yeah. No,
Does it?
I've been following this one so far. They're kind of being left out in the dark. I don't know for sure. They've been doing pretty well on the IPOs, but I've been keeping an eye on this puppy here. A buddy of mine did get some shares. I did what I do with all my IPOs. I consulted the one and only Eric Kroll. And actually, it came up with the same analysis. I didn't think it was going to go crazy on the opening day. Lower price stock. It's buying a private companies, but I thought it would be defended. I don't think that they were going to let this come out and just flop. And that's what it did. It was a little bit weak on the first day. It was defended. I don't know what the rumor was that got this thing. It did get a crazy pop on March 26th. So, whether or not they're left out.
The other ones. That was VCX. So VCX was the catalyst to kickstart DXY, to kickstart RVI. They all went nuts for these things because of VCX. VCX has pulled back in. We covered this last week when you were gone.
Okay.
It has a NAV. They estimate, again, it owns a bunch of private companies, so you can never get that perfectly. But some people estimated the NAV was $19. Stock went to $500. So the net asset value is like 19. So that's why Citron came out and they said when the stock was 400, great call by Andrew Left. Maybe it was a little bit of an obvious one because we were saying it too. But you couldn't get a short. I couldn't even get a borrow on it. So I don't know if Andrew got one, but it was very difficult to get a borrow on it. But when you look, stock collapsed, from 400 down to $100. And then now it's bouncing again here because people are excited and they think this is a way to get a piece of SpaceX. But I was playing it through DXYZ. We had a good trade. I bought it at 25. I flipped it out at 31 and 33. So last week, I just rebought it yesterday. I kind of wanted to come all the way back to 25, but I'm like, too many rumors out there. I don't want to miss it this time. So I bought it yesterday at 26.78.
Yeah, so, he bought it at 26.78 and it went to 26.45 and he was complaining about it.
You complained.
You said you complained about it. 33 cents.
You were complaining. You told
I wasn't complaining. I was complaining about you complaining about it. But back to Tesla here. It got the boost with the market yesterday. It's getting a little bit of a boost today. Man, it's far away from the moving averages, approaching a death cross here. I mean, when there's rumors out like that, you got an up market here. Maybe if you have some long targets, on the upside, I just, blindly shorting it. I just don't see that being a good scenario, though. I know some people in the STN room will. I'll just give you your next daily high at 384.44 as a potential target. I don't think you've hit that yet in the pre-market session. Nope, just kind of creeping up here. So, it's got the catalyst, and let's see if
it's got a potential catalyst. We don't know if it's has, but also registrations tomorrow. I don't think the numbers are going to be good. I think the Tesla numbers are always seen.
I don't think he cares about cars anymore. Dennis, I don't think he cares.
They see it as a future, humanoid / obviously autonomous drive company here, and they're not caring about the current numbers, which is unbelievable, really, when you think about it. The other stock I was thinking about that has SpaceX exposure is XOVR. This is one that's not on everybody's radar, but they have a lot of public companies in there. So they have a big position in SpaceX, but they also have a whole pile of public companies as well. They own NVIDIA and Meta and Arista Networks and Palantir and Interactive Brokers. So it's a little tricky because this one actually is trading off of its stocks. I mean, you've got high frequency traders that can trade this thing because they can see the values of the stocks and go from there. But they got a pretty good exposure. Again, they put these together, these special purpose vehicles there to ventures to put together to get the SpaceX exposure. So a lot of these companies don't own them directly, but they own pieces. But this is also one that could pop if a SpaceX, so put this on your list. This is one that could also pop if a SpaceX IPO gets announced next week.
Someone in the chat is being kind enough to point out that Breeze4 5966 Stats is a SpaceX play. They have 11 billion position in the stock, sold their spectrum rights last year. So that stock is
a lot of companies that have exposure to it. So a lot of different ways to play it. Sats really didn't, I guess it did pop on that when BCX was going. But, you know, again, I'm playing it through DXYZ. That's
okay.
the one I'm playing it through. So we'll see. Obviously, if it doesn't get announced, you know, then, you know, that, you know, can obviously, you know, be if it doesn't get announced, you know, it could start to leak back. But if it gets announced, I'd expect a pop in some of these stocks.
Okay, before we get to some of these earnings play, we come to the end of Q1 here, and I just looked at the cash index. That was down a couple hundred points, but it was down 500 points at the low. So a nice rebound on that. But let's look at the top 5 stocks year to date. ExxonMobil, 38%. Getting a little bit of a haircut today. We've been talking about this one.
Do you have the list? We can't show the list here. Okay, I'll show the list, and then we'll go into the technicals. So if you can show it.
You want me to read? I don't know if I have the list actually.
To show it.
Michael, can you maybe throw
here? I'll
that
go
up
through
there?
it. I'll go through it. If Michael has it, he can, you know, maybe quickly screenshot and throw it up there. But the top 5 stocks, so for the first quarter and year to date. So number 1 was indeed ExxonMobil. It's full of oil stocks. Number 2 was ConocoPhillips, up 37%. Number 3 was Chevron, up 33%. Number 4 is very surprising and is going to surprise everyone here. This is the S&P 500 we're doing, right?
Yep.
Yeah. Number 4, I can't believe this is on the list. It's ARM Holdings, ARM. When all these AI stocks have been crushed, there's ARM up 32% this quarter. So that was a surprise one there. And also, energy play, GE Vernova, picks and shovels, is still trading up 28%. Those were your top 5 stocks for the quarter. The bottom 5, now leading the charge down, our good friend Benioff, Salesforce.com down 26%. Shopify down 25%. Not surprising, it's full of software stocks. Oracle down 25%. I own Oracle, horrible. Microsoft down 22%. And UNH, didn't think about that one being in there. It's down 20% for the year. So that's your big 5 winners, big 5 losers. ARM surprised me the most because we've seen AI stocks just get crushed left, right, and center. Yet there is ARM Holdings sitting up there, up 32% for the quarter. That's impressive. You got UNH on the screen. What do you think of this one?
UNH just can't get out of the way here. Are we back down at the lows? Man, we are back down. Is it the lows of the move? Let me take a look here. I mean, not much going on. No, not on the monthly. No. Man, I mean, you still have the, you know, we're not talking about it, but you still have an administration that's, you know, kind of going after these companies. We talked about, you know, Trump stock, not Trump stock. This is not a Trump stock. And Humana hanging out at the lows here of the move. I mean, they're horrible. I mean, what can you say? They're way below all the move. What was the big gap? Was this another Medicare revision thing back at, if you guys could check, that has to be because it hit all these stocks. It must have been some kind of Medicare back at the end of January. That's where all these stocks had the big gaps down here. So I don't know. I mean, stay away, right? Until there's a positive catalyst. And
I mean, the healthcare providers have all had, you know, really rough, not just quarter, but 6 months here. I mean, maybe Humana has held up a little bit better than the others here. Not really. I mean, you could go through like there's like the big 4, the big 5 there. Obviously, UNH is number 1. That's been in the gutter. Humana's been in the gutter. CI is another one. That maybe has held up a little bit better. Yeah, that's held up okay. You know, and then you got some smaller players. Well, CVS is a player too because they bought Aetna. But CVS also has obviously the whole drugstores too. So they're not a pure play anymore. And then, you know, you can get into like the Centene, CNC, which has been a disaster too. You know, there's, you know, and Elevance Health is another one, ELV. I mean, all these stocks, we give all, you know, the hate in the recent bear market to some of the AI names and, you know, some of, you know, the airlines and stuff that have already been hit by oil prices. But let's be honest here. Healthcare providers have been some of the worst stocks to be in, and these are supposed to be defensive.
What about hospital stocks? Are they doing? How are they doing? Looking at HCA. I mean, it's had a rough run as of late, but certainly not as bad as those stocks. So we'll see. I mean, the gains. Unfortunately, I have one of the top five in year to date gainers. ConocoPhillips a position. Unfortunately, I have positions in two of the bottom five. Microsoft, which has been a legacy position, and Oracle, which has been a more recent position.
ADP coming out here right now. Employment change 62,000 versus 40,000. These numbers always get revised downwards, anyways. Here, but it seems to be a nothing burger. The market's not really moving on it. Thank you, Michael, in the background, getting those numbers up on the
and you get a jobs number on Friday when the markets close, right? So that should be,
and it's not about like jobs right now. It's about where jobs are going. I mean, even Fed speak here. Like AI hasn't come and replaced everybody yet. We lost some jobs at Snapchat. It hasn't come. It's about what's to come. That's it. So it's not like this market's, what are these jobs going to show? It's going to show huge losses here. Well, it's not. We haven't got there yet. I think that's still a second half story, and I don't think the market's worried about that at all. That's why the market's worried about is the war. We sold off substantially on the war, and we've climbed back substantially on thinking that the war is over. So one thing, though, just back to the war trade, is the USO is holding up fairly well. I mean, if we really are ending the war, you'd think USO would be going down a lot harder than it is. So that's a little bit of a red flag. The other concern that I have is, what if we do get out of there? What if the U.S. pulls out? What if the strait, gets reopened, but oil still remains kind of higher than it was, like substantially higher than it was? That, my friends, is something that could throw us into a recession. Like we said, if the oil stays up here, I believe it's still temporary displacement. I don't think it's going to. But if it does, all trading is a scenario analysis. This is what we do on the show a lot of times, is I lay out scenarios. And then all my haters will point out the scenario that I said.
You're wrong on.
So when you lay out two scenarios, your haters will always point out the one that you said wrong, because you're saying, well, you're going to be right or you're going to be wrong. If you're saying you're bullish and you're bearish, you go like that. We're laying out scenarios for you here. If oil, I don't care about really employment right now, I'm going on to oil. But if oil, what do we got for employment though? Wait, sorry. What are we looking at here?
This is Kalshi, and this is for 2030.
Okay.
And unemployment above 8% is a 63% probability.
Where are we right now on the unemployment rate?
We're still under 5. We're still under 5.
So 63% chance going to go up substantially here. I think that's probably right. Back to the oil conversation here, though. If oil remains high despite, the war ending, well, that's going to have repercussions, because everybody is banking on that oil is going to come back to where it was. I don't know if I totally believe that. And also, a guest on CNBC yesterday was making a good point and saying, well, they closed the strait once. Even if we pull out, what if Iran all of a sudden says, hey, we got a lot of power here. We can close this strait whenever we want. So, I mean, this is a concern as well. So I think in any deal, I would hope that the U.S. government would negotiate, a deal if they're doing a ceasefire to say, hey, you're not going to close the strait anymore. But, maybe that's not going to be the case, because Trump has said he doesn't really care if the strait stays closed because we have oil over here. So, I mean, lots of wild cards here to think about. But even though the rally yesterday makes us feel really good, 230 points up in one day from the lows, awesome stuff. My long-term account feels a lot better after yesterday, too. We're definitely not out of the woods. That's what we're trying to say.
Yeah, I mean, you got to keep it in mind, too. I mean, Iran makes a lot of money by exporting their oil, right? So they'll still, they need money. So they'll still let their ships go through. But yeah, you got a real tug of war, and it's going to be a long time before we start getting that sludgy Venezuelan oil, right? So we do have it.
Yeah. No, a long time, Joel. Like, this is like not easy to do. That's why I'm saying I still like a stock like Valero. It's up substantially, obviously. I wouldn't chase at this point in time. I wouldn't chase any oil stock up at this point in time. I told yesterday on the show, I said if I owned Oxy, I was saying to Warren Buffett and to everybody else who owns it, I would sell it right now. It was at 66.5. Okay, I'm already at 4 points on that paper trade. Not that I'm like, sold it or shorted or anything like that. But if I owned it, I'm trying to tell you guys, this is the time to sell. This is the time. Like, it's not too late. The stock went from 45 to 67. Oxy is not the best in breed, folks.
Okay. All right. 8:30, we have our guest coming on, and Nike new slogan, just sell it. Oh my gosh. Nike comes in
Awful.
35 cents, which was a beat. No one cares. Sales 11.279 billion beat. No one cares.
No,
Guidance not good. Dennis, you mentioned the PE in this stock now, and if you think you're getting cheap, it's wrong here because the earnings are going down.
the
Nike.
earnings are going down faster than the stock is going down, so the P is actually rising. I mean, it depends on where those earnings go here, so it's a moving target. But last time I looked, the stock was trading with a P well over 35. I mean, with the new guidance, and I don't know if I have the new guidance in front of me here, but I mean, it's got at 30 times, and if you can look at the guidance and say, "Well, you're talking it's 21," but they're lowered guidance again here too. So I mean, the stock's going down slower than the guidance going down. I mean, if you looked at the old earnings that Nike used to make, the stock's trading like 3 times earnings. Are they ever going to make that kind of money again? I don't think so. That's why, this stock could actually be trading as much as 40 times earnings by some estimates here now. So, I mean, it's hard to just say, oh, this stock is cheap, because if those earnings keep coming down, that's going to drive your PE higher. That's the unfortunate thing about a PE. There's a numerator and a denominator. So I don't know what to say about Nike. All I can tell you is there's no dip being bought here whatsoever. The stock is breaking down to a new, I don't even know how many year low we're at here, Joel. You got to
Oh
go way
boy.
back on your chart.
I bet you, are we below the COVID low?
Oh, I think so. Go
The
look.
co-
I think we're,
co-
oh yeah,
yeah,
well below it. Well below it.
yeah. Wow, you're getting back. I mean, they need an athlete. I mean, an athlete. Like they need someone new,
It's not even
superstar.
about an athlete anymore. It's about just the younger generation is wearing different stuff. It was always Nikes. Get your Nikes on. Your Jordan Nikes. Your Jordan Nikes. Back in the day. Bo Knows. Remember Bo Knows? So you're
Bo
right.
Jackson.
That's what built the brand. But they've been unbranding this for so long that they haven't had the big stars for so long that the brand has just lost its way. The brand is not as powerful as it once was. And there's other brands that have come in here. Obviously, even the ones that have come in, the newer ones are struggling here too. I mean, we were all talking on holdings here. A year ago, 2 years ago. Well, that stock's in the gutter here too. That the Nike Eternal brand has lost its way, and that's a major problem for the stock.
Yeah, and I mean, I'm just trying to take a catalyst coming up, and we talked about the Masters. I mean, Scotty Scheffler does wear Nike apparel, but they exited the golf equipment business in 2016. Tiger, Tiger's long gone. We all know about some of the recent troubles that he's had, but not good. Let's stick with. We'll see if we have Mr. Gordon here and. In the studio yet. Todd Gordon is going to be joining us, Inside Edge Capital. Very much looking forward to his insights in the market. A stock that Dennis and I have been perennial bearish on, but never really short it. Restoration Hardware comes out with a sales miss and an EPS miss, and it's breaking down. No one wants to own Restoration Hardware.
This is and these stocks were reporting on really good days. I mean, the market was
You
up
said that. Yep.
last night. I'm like, if there's bars are pretty low for these companies here, I'm like, if they can say anything okay, some of these stocks can rise. They can't say anything okay. Restoration Hardware, an enormous miss, just an enormous miss. $1.53 versus $2.22. Guidance coming lower. Sales missed. Sales missed big time. 842 million versus 873 million. That's a big miss, folks. And then they're bringing down the Q1 sales guidance, 781 to 797. Analyst estimates way up at 880. So they're dropping that another 10, 12%. The sales guidance here too. Restoration Hardware has lost its way. And the other concern that I have for Restoration Hardware is you're going into an economy where I believe there's going to be job losses in the second half. This is an expensive store, Joel. You go in there, there's $10,000 couches. I mean, yeah, when everybody's making, 3, 4, 500,000 a year, and all these software engineers, are making and raking it in, maybe you can afford a $10,000 couch. I think there's going to be less people that are going to afford $10,000 couches in the future here. So somebody said it's $40,000 couch. I didn't know it was $40,000 couches, but the stuff in his store is very expensive. It does well when the economy is doing really good. But when the economy goes south, this is not the stock for you. Is this a dip to buy? I mean, there's some support down here. Could the stock bounce back? I mean, we're in a little bit of a better market right now. But man, they said nothing good. And when companies are lowering guidance, they're not forgiving them in this market. There's no bounce back on the companies that are lowering guidance, and that's what they just did.
I sent you I mean, I also think they like way overspent on some of their stores. I sent you the pictures from this one they built in Birmingham, Michigan. 3 floors of like 10,000 square feet. And then at the top of it, with very pretty nice high-end restaurant that you get, I don't know. I think Lisa looked into reservations and stuff for the fun of it. They're like, you're booked like 2-3 months out. So you gotta you're overspending on it. And then I'm telling you, this is enormous. And we were looking at the couches and stuff, and we're like, absolutely no way. So you are now sub 110. I talked about 110 in the STN. I mean, the only way you're gonna catch a bottom on this one is if you keep put bids out there, bigger size, and keep letting them get hit. But currently trading down 21.5% here at 109.60. It looks like Todd Gordon from Inside Edge Capital is locked and loaded there in his trade cave.
Nice.
Let's run that intro. Todd Gordon, Inside Edge Capital. What an easy Q1. I mean,
such a joke. So easy for all of us. This was
a rough start to the year. It really was. I was looking forward to talking to you guys. This has been a rough one, but I mean, it's not like massive meltdown. It's not like, massive sustained VIX readings. It's just been a slow unwind. I don't know. Do you guys disagree with that?
Yeah, no, it's been steady as she goes. It wasn't really that violent. It was just like death by 1,000 cuts for a lot of stocks. Like, I mean, we can look at the S&P and say, what are you talking about? We were down like 6% for the quarter. It really wasn't that bad. I don't even know if we were down 6% with yesterday's rally. But when you're looking, at individual names, like, some of the nosebleed PE stuff, I mean, it just was steady as she goes down every day. And the software names we've talked about a lot. But there was a lot of stocks that were down, significantly here. We just looked inside the S&P 500, and obviously some big names there with Microsoft, down. I'll just get the numbers here for you here too, Todd. Microsoft was down 22%, Oracle down 25%. Shopify down 25%, Salesforce down 26%, even good UNH was down 20%. So there was some damage under the hood in the quarter.
But I think you're right, Dennis. Is like the impact of the index wasn't as obvious because I think in anticipation of Middle East escalations, the value trade, the stable trade was bid up. And then I would say that value started to sell off maybe the 4th week in January, heading into Feb. And then there was a rotation out of value back into, non-software, but back into technology as a little bit of relative strength, which kind of masked to your point, like it didn't look that bad in the indexes, but the rotation within there was very violent in different areas of the market, that, if you were on the wrong side, like that hurts.
Yeah. And I think, the energy was up so much, obviously ExxonMobil up 38, Conoco up 37, even though it was a smaller piece of the S&P, it really helped because it was so strong. So if you had that little piece of energy, and a lot of people didn't, and I didn't have a lot of energy in my portfolio, talking oil stocks, not even energy. If you didn't have any oil, it was a really ugly quarter.
It really was. Like, and I mean, I know you, I'm not patronizing, but I know you have really smart viewers. Like, how many know what the sector representation of energy is to the S&P?
I think it's like 5% or so before the quarter started, isn't it? Isn't it somewhere?
It was like 3 or 4. I mean, I know but I don't know.
I try to ask somebody else.
I know but like, I mean, and I'm just watching. Like, I was prepping for this morning, and I was like, when did energy start to outperform? And again, I think it was right when we came into the new year in 26. XLE started going up off the lows. So did crude. So it was all January where XLE was showing relative strength. And then, we got confirmation of escalation in probably second or third week in February. So energy was already there. And my question, I've searched and I've, asked all the AI agents, like, how much of it is in anticipation of global risk premium with geopolitics, with crude, or a rethink of how long fossil fuels are actually going to be with us, how important energy independence is to, sovereign nations, which, Europe and Ukraine and nat gas. And we've had several reminders of that. Like, how much of it is continued, I would say, structural demand versus risk premium? What do you guys think it is? What's the breakup?
I don't know. That's a big question. Throw that one at Joel.
Yeah,
that might be above Todd's above our pay grade here.
No,
we're just chartists.
No, dude, I've asked all the AI agents. I look inside.
Give it to me again. Give me that question again.
Joel's ready for it.
How much do you think? And I've gotten multiple answers, so I'm not trick question. Like, how much is a rethink of the ongoing structural demand for fossil fuels and the importance of energy independence to a sovereign nation, right? Versus, and then you throw in the oversupply of oil versus the risk premium for what's going on in Iran with closing the Strait of Hormuz, of, oil going 120 from 50. How much of the $70 move, how much was global risk premium versus a rethink of the continued demand that this country and other countries are going to have for energy?
I'm going to take, because it's a great question, because you know what? We've been talking about nuclear nonstop, nuclear.
Yep.
And everybody's been piling into all the nuclear stocks. We just left oil for dead. We just left it for dead.
Yeah.
Biggest source of energy. I mean, we can talk nuclear all you want. They want, it's cleaner, it's better. But I mean, if you just want cheap energy, oil probably is still the cheapest form of energy out there. So, how much, you're asking, can oil sustain higher potentially because of the AI trend? I mean, which, nobody is considering here whatsoever. I mean, the market is just expecting, Todd, that war ends and oil comes back down to where it was.
That's my point, Dennis, is like, okay, when the global risk premium, the geopolitical risk premium comes out, does crude go back to $60?
I don't think so.
I don't think so.
I don't think so. And that's a problem, because if oil sustains at these levels, I'm not saying it's going to stay up here, but even if it stays over $100 a barrel, that's real bad news for so many companies, because we are still a huge consumer of oil. I mean, you think about airlines, you're thinking of those direct plays, but the indirect plays too. Everybody uses oil. Everybody drives. Everybody uses gas. We don't all have EVs.
And this is what's driving me insane too, is like, we're active management on, at Inside Edge. So I started rotate in emerging markets, ex-US, Latin America was showing some really powerful stories down there.
Sure.
But then once, as I said, sort of we got confirmation that, Middle Eastern tensions were going to explode. There was a rotation out of value back into tech. US, I think, is acting as a safe haven. One, because we're an energy exporter, right? We do, we're not totally insulated from the inflationary pressures, but the US is an exporter of oil, so that's fine. So it's like the whole rotation overseas, which looked real, just got stopped very quickly. So money coming. So I'm losing my train of thought here, and I know you're leading me down a path. I
think there's a big. You got to put at least $30. $30 of this rise.
This when we go 60. That means we're 90. That means we stabilize at 90 at a lot higher level even after the war.
Yeah.
What does that mean for the economy? Can we, avoid recession, which part of, and then we worry about the jobs. I mean, the AI with the jobs, I'm really worried about in the second half, but oil's a wild card. I mean, I think Todd, you're such a good point. Is oil coming right back? Is it going to go right back because the war's over? It doesn't want to go down. We're talking about ending the war. It's down $3 only.
Hold on. But you make a great point. Like, I've been trading this in Bloom Energy isn't nuclear. Like, it's the oxide cells. Like, that stock's driving me freaking crazy. Like, it's so volatile. It's so all over the place. Yeah. Right. So, but how much also is a rethink of, okay, so we know it's going to be 2 to 3 to 4 years before hyperscalers see any ROI on the massive investment in data centers, right? So it's more in the picks and shovels, energy generation, storage, so on and so forth.
Something good just happened. Sorry to interrupt you, Todd. Yep. Probably got some war news, but we're exploding again to the upside. Sorry about that. We'll get the news here in a second. Todd, you're our interest rate expert here, right?
Sold,
and we used to
have.
What'd you say?
What?
My P&L just goes sold.
I'm just looking at what did ES
I
do?
got picked off there.
Okay, sorry about that. I was a
That's
little
fine.
sorry
Something
about
was
that,
said.
Todd. I just
No, it's all good.
get a little excited. We'll get the news here in a second.
Oh, and it's right back in your face.
Yeah.
It comes right back down. I should have left all those orders out there. Everything I sold was awesome. I should have stayed out there.
Being a
Holy
market
cow, that
maker.
was 66.11 if 45 bid and then right back 20 offered in your face.
Yep. Yeah.
All right.
Good old my initial with good news. They sold it. Bad. I don't know. Looked at good news. We'll find that out in a second here. But Todd, one lifeblood of this bull market has been the Fed in lower rates, right? Pumping Powell coming to the rescue. Now, what did we have, like 2 or 3 rate cuts on like automatically for the year? Now the Fed is done.
Yeah.
Talk to us about the Fed, real rates, and the impact on gold.
So the headline, I want to stop you for a second too. I'm going to hold that question. Is that the headline is Trump is saying he will cease fire in Iran when Hormuz is open. Is that freaking bullish? Like the Wall Street Journal.
That's a big win.
Let's just recap how crazy this market is. We rally 100 handles on Monday night because we get a report from the Wall Street Journal that Trump is willing to pull out even if Hormuz is not open. Now we get the exact opposite headline that Trump says he will cease fire only when the Hormuz is open. And we pop on it again. Maybe bulls are back in control here because we pop on the headlines no matter what. But I don't know if that's bullish.
Yeah, I don't know.
I'm sorry to interrupt, Joel.
No, that's the kind of market we're in.
A crazy little move.
That's the kind of market we're in. So
yeah, headline driven.
The big thing, like back to the point or the question, Joel. Energy rates so important, right? Yields come up off the lows. We had a June cut set. Now it looks like there's not going to be another cut until not next Halloween, but 2 Halloweens from now. I think it's like October 27, last I looked. So, and what's also frustrating is you'd think gold would be a safe haven in this kind of environment. And what's happened is interest rates have gone up, the whole yield curve has shifted up. Real rates, have gone up. See what you do, and I have a chart if you want me to show it, but you take your nominal 10-year rate, and then you factor in 10-year tips inflation, the net difference is expected inflation. And what's happening is nominal rates are going up faster, if you can believe it, than expected rates or expected inflation, right? So that's what you call real yield. If your yield is 4%, but you have 2% inflation, your effective yield is 2%. Same thing as 2% nominal with 0% inflation, which was, 8 years ago, whatever. So real rates are going up, and that is one of the biggest negative drivers of gold. So as we were allocating to materials in anticipation of war and escalation, right, we're like, okay, we got pretty long gold stocks over the last 3 months. And now, once tensions really explode, you have real rates going up, the gold trade's coming off, dollar is bid. Dollar is still very kind of range bound, but pressing the upper end of the range because don't forget your global financial crisis, all, money generally comes back to the US for short-term safety and liquidity. So dollars bid, rates going up, gold selling off. So one of the things I'm going to be looking for, I just talked about this in CNBC, and I don't know if I made the point or not, but I think we need gold and silver to bottom as a reflection of rates topping out, the dollar no longer bid, and real rates stop going up. I would like to see gold and silver start to bottom as a confirmation that we're going to rotate back into equities. And to go one step further, there's an old macro relationship. Silver goes up faster than gold, silver gold ratio. That is generally a risk on macro indicator because of the industrial demand for silver. So, I like that gold stocks are starting to bottom. And I just don't want, from my opinion, I don't want people to think, oh no, gold's coming back. That's safe haven. That's risk aversion and get out of stocks. I think we want to see it move higher.
Okay.
Lots of things to consider here too. I mean, gold obviously and silver for the longest time have, moved inversely, but we had so much speculation in this from the course of the last year that it was a different type of investor in there. And it's short-term, long-term investors are just in there. They don't buy and sell. So you don't have to worry about them. What really moves price, and people don't realize this, they can say, well, 80% of investors are gold, so it's not going to move that much. What moves price is short-term investors. Speculation moves price.
Absolutely.
And speculation was just rampant, especially in silver, even more so than gold. 100%. I mean, when you see SLV have I don't know how many standard deviation move that was, but when it goes from $30 to 115 or whatever it does in 4 months, this move is just ridiculous. It's absolutely ridiculous and unsustainable. And that's what we're seeing as the speculation come out of that now. I think at a certain point in time, we stabilize and maybe gold and silver retake their, characteristics of, being defensive. Mm-hmm. But right now it's still speculators in there and they're still moving with speculation.
I push back on you, Triple D. Like if you really look at the correlation of gold and the growth trade, I mean, they've both been moving higher in the condition of yields that are topped out, inflation that is generally viewed to be topped out, and the Fed on a cutting path. Like gold and stocks been trading together for, I would say, a year or two.
Even farther than the 6 months, that I'm talking about. Yeah.
Here's that pretty chart. I don't know if you could.
I'll pop it up there. There we go.
So this is what you do. Just go to Fred is a wonderful St. Louis Fed. They call it Fred. It's wonderful. You
I heard about
a whole bunch of stuff from it. So this is your nominal 10-year yields minus 10-year tips yield overlaid with gold, right? So in 2026, we started to get rates moving up, real rates moving up here as gold was spiking. And then as soon as we started to get confirmation of, Middle Eastern really blowing up, we started to get the rally in real yields, nominal yields going up faster than expected inflation. And that's when gold took the big drop. So a little bit of it, I would say there's a pretty clear inverse relationship. This is going back to late 24. So just watch gold. Other stuff like, and back to that point on energy stocks, I as I'm watching, how do I stop share?
I can do it. I'll pull it down for you.
Okay, thanks. The more that I'm looking at the uncertainty of how to price the AI trade, which I very much believe is real, like you got to find stocks with good fundamentals. And I think that's another reason that we rotate into energy. These companies with solid dividend, reasonable valuation, they're ROIC. That's a metric I know. I like to look at dividend stocks, return on invested capital, like solid fundamentals. I think are winning out in here as I'm looking at the returns in our portfolios, and I'm looking at the long-term return in the midst of this AI bull market. We're battered over the head with how AI is going to change our life. I see it, but maybe the way I'm managing the portfolios, but the returns I'm seeing are in the dividend producing portfolios on a more sustainable basis. I don't know if you guys have seen that, or know what I'm talking about, but
even back, and Carter Worth made a good point on CNBC last week, just talking about dividend stuff here. He looked, and I was blown away by this. He looked at the markets, the S&P and the XLU for the last 30 years. And did you know that dividends reinvested in both the XLU has outperformed the S&P over the last 30 years? I'm blown away by that. Like you would not think, utilities are safe, and they are safe. So he says, you've been taking all this risk in the S&P for the last 30 years.
But how much of that is backloaded in the last 2 years when utilities became a growth trade and put on?
Maybe it did help it. Maybe it did help it. And that's a good point there too. But just saying, that's the numbers are the numbers. And I was like, I'm absolutely blown away by this, and you're right. XLU has really had a good couple of years here, going from, being up 25% and then you get the dividends on top of it all. But I mean, that's an incredible statistic.
That's incredible.
So here we are trying to beat the market, and all we had to do was buy the XLU.
It's crazy. It's crazy.
It's crazy.
But I mean, let's go. Can I hijack this one more time?
Of course.
Can I show you two more charts that I talk
about?
We
love
Todd. You can. We'll stay here until 10 o'clock.
Stay here all day with Todd Gordon. He's great.
Every time I'm on CBC, the producers are like, Todd, rap.
Yeah, not here, baby.
More. That's why we're the better network.
I get the picture. Shut up, Todd. This was kind of cool. Just going old school technicals on the ratio. I feel like some of the valuation semis, if we're going to have that valuation, quality financial conversation, like look at SMH into SPY. My old school technical LE wave, just a nice little 5-wave pattern. This is all 2026. So as much as we've had the big rotation out of growth, and it's huge, massive crush on software, which I think goes to validate that AI is going to disrupt. I think that pattern's amazing, and it breaks higher. So SMH outperforming the S&P. And then this chart I put this one together. This is going to be NVIDIA going back to 2015. And this is just the next 12 months forward PE. So you have NVIDIA trading 20 times forward earnings. In fiscal year 27, this is GAAP. They're looking to make 829. If you take 829, you divide that 170.24, it's 20 times forward earnings. NVIDIA's been this cheap. This is the fourth time it's been this cheap since 2019 when it was at pre-split, $2 a share. You look at the growth, right? 26, they're 59% EPS growth, and then 27 going to 73% growth for 829. That's the expectations on 70% revenue growth, 80% gross margins. Like, this stock is now cheap. And I don't know how you don't look at this and say, if we hold the 20.5 forward PE, like, how does that not view as support?
I've been long NVIDIA for a long time. I actually recently added a little bit, and then I got spooked and I sold some of it back.
I did the same thing.
But I'm like, I don't get it. I mean, I'm with you, Todd. I'm like, this is like no brainer, but every single person's saying the same thing, and I'm worried it's just too bloody crowded. That's what I'm worried about.
And good luck following this this 50 billion investment. Amazon, Microsoft, and OpenAI fighting with each other, like trying to make sense of that one. I don't know if you can. You're smarter than I am, but yeah.
All right. In 25 minutes, we got through half of your topics with Dennis. This segment was brought to you by the Brookings Institution, where we.
You guys are awesome.
No, man. You guys are. I just have to admit, man, you got a couple sharp fellows I'm working with here. Todd, you bring it, the economics, the fundamentals, and Dennis always being tested and see the wheels turning. So great. I really hope everyone enjoyed this segment. Todd Gordon, Inside Edge Capital, helping us navigate these crazy markets. Todd,
I left you with more questions than answers, to be honest.
Yeah,
thank you for having me.
That's the market. Todd Gordon,
awesome, Todd.
Inside Edge Capital.
Okay.
I think we just got to end the show after that.
I just got to stop
do any
on
better
that
than
headline
that.
again. Joel, I just got to stop on the headline again. So I'm blown away that, we rallied that hard. Like, the algos read that headline as bullish. These algos shows you right here sometimes are pretty stupid. That was not a bullish headline. Unless I'm missing something else, that was not a bullish headline. That's why it was ridiculously short-lived. All they see is will cease fire. I honestly think this. They see a headline, will cease fire, and they just buy.
I agree. That's exactly what I thought.
It didn't read enough. When Hormuz is open. It read the first three words, will cease fire, and they bought us up like 30 handles in 0.3 milliseconds. Like, that's what they just did.
That's what happened.
And then they read the rest of the sentence, and they immediately start selling it off. Because you know what? This is this is not a good headline. This is not what we rallied on the Wall Street Journal. Like, I think for the world, I want Hormuz to be open. So I actually kind of like this. But from the stock market perspective, we rallied 70 handles because he was going to pull out when Hormuz was not open. Now he's saying, no, I'm going to pull out only when Hormuz is open. And we rallied on that too. So that was a mistake by the algos here. And they are paying for that right now because I sold a bunch of stocks up there. I wish I hit the cancel all orders button as soon as I didn't know what the headline was. I wish I would not have hit the cancel all orders button because every single stock that I sold, I made 1, 2, 3, 4, 5. Well, trades, some of them were partials. 6, 7. I don't know. I made like I got picked off in that 1 second and sold 22 different things. Or 22, not 22 different things, but 22 trades. 22 trades in that 1 second. And I'm like, cancel all because I don't know what's going on here. And I'm going to get run over if we keep going. And then, like, literally by the time I bring the stuff up, I was like, those were all good sales. Those were all good sales.
Dennis, you're revealing your tricks of trade.
I don't know if I am.
Our entire pre-market prep crowd.
To be sitting
thousands
out there
of people.
In a headline-driven market.
Just leaving orders out there.
Yeah, you should not be doing that in a headline-driven market, folks. That's not the way to success. But I can't help myself. I still float a few out there. Yeah.
Okay. All right. Well, we got in trouble for going overtime yesterday. So we're not going to get in trouble for today.
But again, I'm going to repeat here. I don't think this is a good headline.
It's
I
not?
wouldn't be surprised if we give it all back. Like not all, like give it back the overnight rally here. Like we just gave him back basically over half of it. And unless Trump says something else, I think we continue to leak on this.
Well, it's
But maybe
early.
he says something else in tonight. So maybe the anticipation of tonight changes that.
Yeah, it's early, and the real stock market really hasn't, or the regular session hasn't opened yet. But I think the high of the day is in here. I think that you're going to find people that first of all, people that bought in that pop are absolutely mauled. And if you didn't sell into
all algos.
strength, yeah, then you're still up 24 handles
We're still okay.
until we go back to till we go back to unchanged. So, all right, we're gonna wrap it up today here on this pre-market prep show. We're gonna dust off Angie Setzer tomorrow. Commodities, right?
Angie,
We gotta
nice.
find out about those. What a better time to have Angie on, right? Talking about stocks, the fertilizer. Where's the fertilizer coming into growing season? So one more day without the Brentster here, folks. Thanks for joining us here on this version of Pre-Market Prep.